Okay, hi there, Jeff here with a video looking at the importance of household debt. Here's an interesting chart showing the total value of household debt in the UK since 2000, and as you can see, it has climbed significantly, particularly over the last few years. As we headed into the first half of 2014, household debt was well above £2 trillion. So what are the main sources of household debt? Well, the biggest single source is clearly the housing market. Mortgages. So people take out a mortgage loan to buy a property. I did so recently. And typically repayments are spread over a long number of years, perhaps 20, 30 years. You can pay back the mortgage earlier if you can, but it's a long-term loan and it's the biggest source of debt for households in the UK. The interest rate on a mortgage can fluctuate, depends if you have a fixed or a variable rate. And obviously the interest rate moving up and down can affect affordability. So if your interest rate goes up, the amount of monthly interest payments that you have to pay to your bank or building society goes up too. There's a lot of consumer credit, short-term borrowing, personal loans, credit card borrowing, overdrafts where the bank allows you to go overdrawn on your account, and also the informal, very high interest rate payday loans. A lot of this debt is unsecured, so whereas mortgages are secured on the value of the asset, aka the property, consumer credit, personal loans and credit cards is unsecured, and therefore the interest rate on that debt is significantly higher. Student loans, obviously in the UK, topical issue. So students in the UK take out government-backed loans to cover tuition fees and living expenses. Repayments are income contingent, so it's a different type of debt. You only start repaying some of the debt when your earnings exceed a certain threshold per year. And another big area is car finance. So a lot of consumers finance car purchases through monthly payment plans, followed by an option to buy or return the vehicle. Leasing and hire purchase agreements also common. There is a lot of car finance in the UK. So household debt is pretty significant. We know it's over £2 trillion. One way of expressing it in a slightly different way is household debt as a share of income. And you can see that during the period leading up to the financial crisis in 2007, 2008, there was an explosion in household debt relative to income. It climbed from about 95% in 2000 to over 150%. So there was clearly a credit boom in the UK, fueled by easy access to credit, a boom in housing mortgages, including subprime lending, and also a relaxation of credit controls in the financial system. Now, since then, the ratio of debt to income has come down, and it has. It's now below 120% of income. The cost of debt, though, has gone up, and mortgages are a good example. So this is the same period of time. So whilst most of this period mortgages were becoming cheaper, in the last 3 or 4 years, mortgages have become much, much more expensive. And here's a chart showing outstanding student debt, the vast bulk of which, of course, is in England. So household debt is a big issue for the UK. In particular, it makes many households, millions of households, quite vulnerable to changing economic circumstances. So household debt is over £2 trillion. Unsecured debt, ignoring mortgages, is over £14,000 per household. And so therefore the vulnerability to shocks, including the cost of living crisis or higher interest rates, reduces their ability to spend. Millions of homeowners, and over 2/3 of a million this year, are expected to face higher mortgage payments because of fixed rates becoming due for renewal. So when mortgage rates go up, that reduces their effective disposable income and cuts their spending power. And there's also the rise of default and instability. The Bank of England, in their financial policy report, has raised concerns that a weaker economy with continued high interest rates could increase loan defaults, which could then weaken commercial banks and other financial institutions. So again, there's a risk of a broader economic downturn because of the sheer weight of household debt in the UK.